All right, what's up, everybody? It is the end of the week, TGIF, and the markets are getting crushed again. I just went to all cash just to protect myself, but I wanted to do a video lesson explaining what is still working in this market. Just because the market is tanking, just because we might have some more downside, doesn't mean that you have to stop trading entirely. You just have to be more selective. So I'm going to go over some of the best setups that are working. First, I just want to make a few announcements. The Trader and Investor Summit, my conference, along with nearly a dozen other millionaire traders, we will be doing live trading and also teaching for 3 days in roughly 1 month. October 3rd, 4th, and 5th, we have just 4 seats left. So if you are going to come, I highly encourage you to grab that this weekend, because the seats will be gone and we can't expand it anymore. This is going to be our biggest event. It is going to be amazing. So if you go to traderandinvestorsummit.com, you can get a ticket. I'll also post a link below this video. Secondly, I have a back to school sale going on right now for several newsletters and for these DVDs. 45, 50, 70% off. You need to study, especially in markets like this, to protect yourself and so that you really can excel when pretty much everybody else is breaking even or losing money. There are opportunities, as you'll see. So this little video I will be going over is how I've made 126% in a down 10% market. So I'm up roughly 126% this year since I began on February 1st. So not exactly January 1st. January was a little too busy for me, so I didn't have everything together. But February 1st, I opened a small account. My number one broker right now is E-Trade, and that account has grown by 126%. Actually, E-Trade has grown more than my other accounts. E-Trade, I started with 30,000. It's up to, I think, 112,000 or something. So I don't know what percent that is. I'm not good at math. Leave a comment. Tell me what percent that is. But E-Trade is my number one broker. But overall, my accounts are up 126% in this down market. And what has been working the best is buying billionaire plays and earnings winners. I still short pump and dumps, but there just haven't been that many shorts and there haven't been that many pump and dumps. So you got to focus on what is working. Billionaire plays and earnings winners. In the past few weeks, there haven't been as many billionaire plays. We had more earlier on in the year. So earnings winners are my focus right now. And I have to go over this. I go over this in my DVDs. You really need to watch this DVD, How to Make Millions. So many of you would benefit. It's just $297. It all goes to charity. And I think it's my best DVD. It's 35 hours long. It's my most comprehensive. And it should crystallize everything. These other DVDs are great, but How to Make Millions is the most comprehensive. And in it, I talk about how to find earnings winners and also how to make millions. But an earnings winner is determined by the reaction to earnings, not the numbers themselves. I can't tell you how many questions every single day I get. How is this an earnings winner? They reported a loss. CNBC says it's crap. Well, CNBC is crap. That's why their ratings are at all-time lows. And that's why their ugly, bald-headed leader is right roughly 35, 40% of the time versus me being right 70, 75% of the time. I have more hair and I have double the winning percentage. So you choose who to follow. And you should never follow anybody blindly. You should study. And what does he say? I don't even know what he says these days. I don't care about traders who are, right 30, 35, 40% of the time. And I don't care about non-transparent traders. There are non-transparent traders out there. They're like, Tim, I challenge you, blah, blah, blah. And I'm like, well, I report all my trades openly every single day. So there's really no challenge. It's kind of funny when traders who don't show all their trades think that, oh, I'm going to, come out of the woodwork and start showing my trades. Well, do it every single day. Do it every day for a year, 2 years, 5 years, 10 years, 15 years. That's why it's kind of funny when these non-transparent traders who want attention, the press never features them. They have these small little businesses because they're so freaking sketchy, it doesn't matter. So for me, I don't care about CNBC. I don't care about non-transparent traders. What I care about are strategies and patterns that work. And an earnings winner that spikes in reaction to earnings is amazing, because then it can spike for days or weeks given the new bullish information. And you don't have to understand the bullish information. It doesn't matter if they said something positive in their conference call, or maybe they did had good revenues or good profits, or maybe they introduced a new product, whatever the case may be, the reaction to the earnings announcement and the conference call is positive. And so you want to see a 10, 20, 30, 40, 50% spike in reaction to earnings. You might see a company that reports great earnings and the stock does nothing. That is not an earnings winner. I need to see the stock appreciate considerably to show that people are impressed for whatever reason by this earnings report. And if they're impressed by the numbers, the beautiful thing about penny stocks is that everything is not priced in real time. So when one group of people are impressed by the numbers, usually a follow-up group will be impressed by the numbers, and that compounds over days, weeks, and months, and you can see these stocks that can double, triple, or even quadruple after the earnings are already out. So it's your job to not necessarily track every company that's reporting earnings like too many idiots do. Focus on stocks that spike in reaction to earnings, and especially earnings winners with tons of shorts. Okay, if a company has tons of short sellers that have been betting against this company, and let's say the stock is down 70, 80, 90% in the past few months and years, and now this company might be turning around, the stock might be bouncing, short sellers, in order to take profits on any short, they have to cover, they have to buy to cover. And you can get these short squeezes that happen very quickly. And I'm just bringing up three recent examples, three of the best earnings winners of the past few weeks. CRK turns out to be one of my best buy alerts ever. I was buying this on a dip. So this is CRK over 3 years. It's already down from the 20s and is down here to the 1s. And let me just show you when there was earnings, just so that you understand. It was right here. This was the earnings day. Can you see? Let me show you the difference between pre-earnings and post-earnings. Pre-earnings, post-earnings. And, you know, it had already spiked to the 150s when I bought, and I bought it on the dip here in the 130s. And, you know, I thought that it could get back to the 150s, maybe the 160s, maybe even 2, because there are a ton of shorts. This is not my typical kind of play. It's a boring energy company, but it was down a ton, and the reaction was good to earnings, and I figured, hey, you know, what's the risk? I'm buying it at 130-ish. If I'm wrong, I'll get out at 120. So 10 cents of downside and maybe 50 cents of upside. Turned out to be $3 plus of upside had I had the patience to hold over a month. I don't always trade these things perfectly. Those of you guys who study with me, you know that I might have, you know, a good buy alert or a good idea, and then I might sell too soon. I might get impatient. There's a million things that you can do wrong. But what matters for you is that this pattern works. And my own personal failings as a trader don't matter to you. You might actually laugh at them or they might educate you, but this pattern works. Buying it on day 1 or even day 2 or day 3, as it turned out, or even on dips. I like buying dips especially. I don't like chasing earnings winners. And, you know, if you actually wait for those dips, you have better odds of success. You lower your risk. But you don't want to just buy random stocks that are dropping. You want to buy earnings winners that are dropping on dips. EFOI is an example of one that I bought on a dip in the 16s. This was the earnings right here. So it definitely spiked up in earnings. And then it was kind of coming down in here. I think I bought it right here on this dip after it had a huge up day, and I was dip buying it, and it didn't really do anything for a week. You know, earnings winners, the one thing that I will say, it's not like, okay, let me buy it and the next day I can flip it. Sometimes it takes days, sometimes it takes weeks. I've always said this since my initial blog post on earnings winners. But dip buying it anywhere here in the 15s or 16s as it's holding support, you know, above the former breakout here, above 1530, it goes up, and it can go up a ton, and it goes all the way up to 25. There was obviously more news, more contract wins. So when a company has good earnings, usually there's a good tide of news that comes out over the days and the weeks that helps push it up. It's not just random. It's not just all based on one announcement. But when you have one good announcement, usually more good announcements follow up. So EFOI is up nearly $10 a share since my buy alert 2 weeks ago. And then VRA is my most recent earnings winner. And this one, you know, I bought it at $13.30. People are like, Tim, you're over trading. You know, why are you trading a $13 stock? It's not a pump and dump. It's not a penny stock. You're getting away from it. It is a highly, highly shorted stock that is down way off of its highs. If you look at the chart, the recent 3-year chart, it's down from 30. So again, this goes to my thinking where, yes, it's an ugly overall chart. So normally I want to avoid it. I want to get rid of this from my screens. But the difference is that this is heavily shorted, and now there's a potential comeback for the business. If you're a short seller from $30 or $28 or $26 a share, and you have 50% profits, but now the company might be turning around, are you going to take those profits or are you going to hold? Well, maybe you'll hold at first because you'll be like, maybe it's just a one-day spike, it'll keep coming down. But if it starts to come up the second day, then you as a short seller are pretty damn scared. And I was buying it right in here at 1330-ish on the breakout of the morning high. I love when an earnings winner can break the morning high and shows me that it has more strength and it has more upside. Pre-market, this was looking ugly. This was down. Sorry, I have alerts going out right now. This isn't me, this is Superman. But that is the real-time alerts that are going out right now. And, pre-market, this is looking hideous. It's like, I was like, oh my God, I hate earnings winners. And I'm thinking I'm gonna have to cut losses of 40 or 50 cents a share. Sometimes that happens. Sometimes I'm gonna be wrong, you have to accept it. But what happened right at the market open? Huge, huge short squeeze. This is after the news came out. There's no new news. This is short sellers who are getting squeezed and trying to cover it because there are millions of shares that are short this company. And now, the short squeeze is over, so I wouldn't play it. But I am so proud that so many people nailed this. I actually got out too early. I got out too early on CRK. I got out too early on EFOI. And I got out too early on this one. I am not the best trader, but this pattern works so much more often than not. I'll give you another example. CRDS. This one, just happened yesterday. You had a huge spike from earnings and, then it came down intraday and it was hanging around 106. So it's up roughly 10-15% on earnings after being up 20-25%. This is an ugly chart too. And a lot of people are like, Tim, why are you buying this? This is, the crow from your DVDs. You don't like that. Well, a lot of you guys have watched my penny stocking DVD, but not my newer DVDs. Sometimes the patterns can change a little bit. And in this market, because there are so many beaten down stocks, even though despite the multi-year bull market, some stocks have just dropped 70, 80, 90%. When you have a downtrending chart like this, no different than CRK, no different than VRA, this play that has a lot of shorts can start spiking. Just because it's never held its spikes in the past doesn't mean that that's going to happen this time, because this time the spike is due to earnings and it also had huge volume. I know this is a little illiquid, more illiquid than I like, but I took a small ass position and the volume is near record volume for this. So there's a clear trend change here. And even though the markets right now, the Dow is down over 300 points today, this is green on the day. Okay, this is green on the day, and it's choppy. I got in at 106 and it went up to 120. Still hasn't proven that it can break 124 yet, and it's at 119. But it is green on the day, and that's pretty impressive when the markets are getting crushed for this small little company to be green. And I wouldn't be surprised to see this run up even more. I got out at 116. I made 10 cents a share, is basically a scratch. I never go into a trade looking to make 5 or 10 cents a share or lose 5 or 10 cents a share. Those are scratches to me. The question is, can it be, really right? I should bring up Ford, actually. Totally forgot about this one. This is my best trade of the past few weeks where I made nearly $10,000. And the stock spiked in reaction to earnings all the way to 390, probably an overreaction. But then it came all the way back down to the low ones. And I dip bought it in here at 130 before the next day. This chart doesn't show it, but pre-market it was trading above 230. And I got in at 130. And then it did it again. Earnings winners can spike again and again. And if you dip by it again and again, then you can ride the wave. I would not chase any of these earnings winners, especially in this market. I wouldn't chase CRDS here, and this is so illiquid, it's not a great example. But I bought it on a dip, and I showed you, this is an earnings winner, and this can spike again. And guess what? It's probably going to keep going, as I said in my sell alert. But at the same time, I'm playing everything cautiously right now because of the overall market. So you're going to have more and more earnings winners. I want you to watch them, but I also want you taking profits safely and cutting losses safely in this market. As I tweeted earlier today, you don't have to be a hero. This is the most dangerous month of the year, and you need to play it safe. If the market drops 10, 15% overall, that means that most traders and investors are losing 20, 30, 40% of their money because most traders and investors underperform the market. So if you're break even, you are doing better probably than 99% of people out there. If you're making a few $100s, you're doing better than 99.5%. If you're making a few thousand, or if you're up 126% on the year like I am, then you're better than 99.99% of people out there. That is the beauty of having a very meticulous trading strategy and playing it safe. So again, congrats to everybody banking. I'm getting so many tweets and emails. I'm glad that my lessons are finally, hitting home. Trade safe. You don't always have to bet big. You can sometimes pull back and bet smaller and play safer. And really take us up on this DVD. Tim Grittani's new DVD is a must watch. And it's only $1,000 right now. It's regularly nearly $2,000. 35 plus trades. People love it. Look at the reviews on Investimonials. And I got to say one thing, I'm looking forward to meeting everybody at the Trader and Investor Summit in Vegas a month from now. 4 seats left. Take it. I will see you guys this weekend. I'll be doing some video lessons. But again, please be safe. Please, please, please look at the overall market. The chart is broken on the S&P 500. You do not need to be a hero. Cash is king. Stay safe. God bless.